Another lackluster day for the JSE. We ended the day flat yesterday. It seems that we're starting to see a bit of positivity coming through on the industrial and financial front, but resources is what's dragging us down.
I think resources have really shot up in January and February and really led the market up to our recent all-time high. Maybe a bit of froth coming off now that the results are coming out. I mean, it's a whole idea of buy on rumor, sell on fact. I think everybody's having a look at the results. The results have been spectacular. But maybe just in the short term, we've just seen a little bit of an overextension in some of the share prices, a bit of profit taking place, and maybe that money moving into other sectors that haven't performed over the last couple of months. So it could be trading based, but from a longer term perspective, I still think the resources have a long way to go before they get too overheated.
Before we touch on the resource space, let's quickly look at Truworths, which was at the top of the top 40, up 2.73%. And you're talking about perhaps sector rotation and a bit of movement from one sector to the other. Pick and Pay was up 1.1%. We've seen the retailers coming under quite a bit of pressure since the beginning of the year. We're seeing a little bit of a turnaround now. We're talking about leaving the retailers behind, going into the resource players. Could we see such volatility when it comes to sector rotation going forward?
Absolutely. I mean, it happens all the time. I mean, this is just one specific day where you probably had a lot of selling on resources and that money automatically going into some retailers rather than sitting in a bank account waiting for a couple of days. I mean, you're obviously on the back of pretty decent retail data over the month of December. And having a look at the retail share prices, they have seen quite a drop off. I mean, specifically Pick and Pay, I pay great attention to, and that came down quite a lot. And we're starting to see a bit of a turnaround off lower levels, which actually started a while ago. Truworths being up a little bit more than the others, no major significance in that at all.
Woolworths posting a 26% rise in first half profits, lower interest rates being a nice boost for the company as well. You said you mentioned you look at Pick and Pay. What about the likes of Woolies?
Woolies, I think, is a little bit overextended in general. So, I mean, the reason why we're still holding up Pick and Pay is that I still think that's got a long, long way to go. A large recovery is expected there in their margins that they're getting, and obviously food inflation is going to help them a hell of a lot. I think Woolies has got their own issues at the moment, and I believe it's a great business, but I would just prefer to be in Pick and Pay. Don't want to be in too many retailers, you know, just pick a good one and go with it.
You're talking about the resources. Let's get into that. Impala Platinum, we saw diluted headline earnings per share jumping 63%. Revenue was up 38%. No surprise there. We're seeing the industrial metals doing quite well. Platinum counters in South Africa doing well. And then there's this big conversation about whether we should be perhaps offloading Impala and heading into Anglo Platinum. How do you see the play between those two companies?
Well, look, it's an interesting point. Personally, I prefer Impala Platinum. I mean, generally speaking, look, the results look really good, but they're off very, very low base. We need to understand that platinum and gold sectors in South Africa are really struggling, specifically with costs and the strong rand, and that's affecting them deeply and is a great concern from an investor point of view. Taking that into account, you really need to look at the companies that are really keeping their costs under control, and from that perspective, I would say Impala, out of the tier 1 miners between Anglo Platinum and Impala, is probably still a safer bet, in my opinion, from a debt perspective as well, and in my opinion from a growth perspective. So I don't mind Anglo Platinum. I would say Anglo Platinum is undervalued if one is looking for, you know, absolute capital growth. I mean, you can argue it's come down the most and it's got potential to outperform in the short term, but from an investment point of view and from safety, I would much rather still remain in Impala Platinum. I think from a foreign investor point of view, they tend to know Anglo Platinum a lot better than Impala, you know, so it's usually everyone's second choice, but I think it should be everyone's first choice, absolutely.
Anglo Platinum, touching on Kumba Iron Ore, we've got Anglo American out tomorrow, so big eyes there as well, and we had BHP Billiton out yesterday, so a lot of people are going to also be looking at the dividend because BHP Billiton, some say, slightly disappointed on the dividend front. Look,
I think you diversified miners, the results are just extraordinary. I mean, Xstrata not doing too badly, Billiton, I thought it was wow. I mean, that was spectacular. Yes, the dividend wasn't so great, but you need to understand what they're doing with their money now. I mean, there's a $10 billion share buyback. I mean, there's a $80 billion.
Are you happy about that?
Absolutely. I think it's great. You know, I mean, you know, the merging didn't happen, the other acquisitions didn't go through. So, you know, this is one option of actually doing it. The reason why I'm happy about that is that it does give support to the share price over the more medium term, which I quite like. The capex that they're doing, I mean, spending money on organic growth is $80 billion over the next 5 years. I mean, that's massive. I mean, that's basically half of South Africa's infrastructural spend that we want to go on. And then this is just one company that's doing it. Anglo is pretty much a foregone conclusion. I mean, all their subsidiary businesses have released results. So we know about 75% of what Anglo is going to be coming out with. I think we're expecting about $4 per share earnings, which is pretty decent. Puts it on a PE of about 11, 12, which is not too much to ask for. So the point is these share prices are well supported with the earnings that are coming through. And that's when I get back to the idea is that from a medium-term perspective, I still think there's upside here.
What about Exxaro? Expects full-year headline earnings per share to jump 110%.
Yeah, brilliant.
And you know, the stocks specifically in this sector, everyone was jumping into, particularly in the beginning of
the
year.
mantra.
Did you get in last year?
Yeah, absolutely. I mean, I've always been a bull, but I mean, specifically dealing with, well, a bull on resources, but specifically dealing with coal, copper, and iron ore. That's where you really want to be. You know, gold and platinum from a South African perspective is a little bit dodgy, but the other, you know, raw materials and base metals, that's where you want to be, and Exxaro is showing that.